Welcome to Trading Lounge and the gold and silver report for the 10th of February. And looking at gold here on the daily chart, I'm going to be looking at two patterns today. Because we've had this sharp rise in the gold market, then we can assess this particular pattern here in a 5, 3 and 5 pattern here. So an A and a B and a C. So we had looked at this before, this particular pattern, and there's been the one on our website as well. And well, a triangle pattern. So an A wave, a B wave, a C wave, 3 waves here for the D wave, and then the E wave here for wave 4. So that's one way that we could also look at it. The other way we can look at it is finishing off like this here. So let me get, so this is 1 degree smaller, but an A wave, a B wave, and then an A wave to here, and an A, and then an A and a B and a C wave here for the B wave, and 5 waves up here for the C wave here. That will take us into these old highs or just before that, and then see a move down through here. So we've either got this pattern here, and the other pattern that we just looked at would allow this to have 5 waves up here, then 3 waves back, and then another 5 waves up here for this, and then 3 waves down. That would be the triangle pattern. You with me? So on the 5th of 5th of February here, on this low here, we had the dollar index change trend as well. So we've had a look at this before, so we'll look at it again, and I best pay for this service now that I'm using it a bit. So so this is the DXY on an hourly chart. And we looked at this low here. Now this low here, I was thinking about it based on all of this move down through here. It was either the low in the market, or we were looking at an ABC pattern. And the ABC pattern here that I talked about last time, I think we were at the highs here somewhere. And well, it has turned down sort of on cue there. So it's highly likely that we're correct in this market being an ABC pattern, but also turned on the same date here as well. So there's a good reversal between the DXY and the gold at the moment. So it's kind of interesting really, because with this market we're looking for 5 waves down to complete the structure. So perhaps next time we talk we'll have a look at the bigger picture for the DXY, but as it stands at the moment, or even last time we spoke, we were looking for 1 and 2 here, and this little area here was the support, and it did support the market for a little while, but then it's finished support. How do you get rid of that? You know, like that. So now we're seeing wave 1 and 2 here, and coming down for wave 3 here, and we'll see wave 4, and then down for wave 5. That may extend a bit further. We'll check all that out. But the main point here is we should be making a new low here, so I'll probably have to bring that down here somewhere, but I'll figure that out. So we've got this other low coming into place. So this should be the low of the whole move down through here. I'll do some more work on that. But what I'm saying here is that we'll monitor this particular move down, and we'll see how it goes, but we'll be able to use it for the gold market. But not only that too, I'll be able to use things like the I'm in Australia, so I can use the Australian dollar. So also too, this move here was on the same early February low here as well. So it's moved up here. So this here, we're looking at wave 3 here and wave 4 here, and we're looking for a new high here for this market. right? So we'll be able to use the currencies in against gold. But like I said, when I first started to look at the DXY relationship to gold, we just thought that we'd monitor it for a little while. So that's what I'm doing, and we'll just share and we'll shoot the breeze over that. Okay. But it looks like we can use it. Coming back to this market. Yeah, so we're looking for, well, this little move up through here, we're looking at it either an A wave or a C wave here. If it's a C wave here, then we'll see another 5 waves down after that. If it's an A wave, then we'll see a correction, and then we'll see another move up, which will be part of that triangle pattern that I talked about before. So let's just go in and have a look at the tick chart here for a moment. So yesterday we were counting this up as an impulse wave and possibly a corrective wave. This is the 50-60% retracement level area here. And we could have looked at it as an A wave, a B wave, and then 5 waves up here for the C wave, or wave 3. So I've gone with the 5 wave structure because from that high here, I haven't really pulled this apart, but this move here is reminding me, I mean, I see it as bullish corrective. I don't see it as an impulse wave to the downside. So it can pull back to the wave 4 of 1 lesser degree a little bit further, but then push up here. So this group 2 up here, the 1872, is where the old highs were. So 1865, 1870, in that space there's going to be resistance there, and we are looking for one more wave up. So 1 and 2 and 3 and 4 and 5 here. And then from this point here, we can either have an A and a B and a C wave back, 50-60%, and then push up for wave C here of that triangle pattern. So an A and a B and a C up into the 1900 area. Or we get the 5 waves up here, which will be wave C of B here. And I can move that a bit closer in here now. And then we go down further from that point. So what we can do at that stage is look for that low and this high. I'll just take it to the 65, but we can adjust that later. And then this, don't need that there, so this can come into this space here for that. So that's where we'd see the retracement come to roughly. So back into the 1820, 1830 area. So we'll just monitor this to see if we get as an A wave and a B wave and a C wave through here, or we get an impulse wave down. So from the top to the bottom here, if we get 5 waves down, then we know that we're going to be coming further down. If we only get 3 waves to the 61.8% or the 50%, then we know that we're in a bullish corrective pattern, and then we know that we're in that larger triangle pattern. So yeah, we've got as I mentioned yesterday and the day before, I didn't really know what was going on, but now it's starting to mature a little bit. So we've got something to put our teeth into now. So I feel that that's good. It's not that we can really trade this. I mean, sure, you can intraday trade it, whatnot, but we're looking for the bigger trend. We're looking for that big wave 4 low, so we can build into well, you could build into this market, or you could do some stacking, but we'd probably use it to buy stock with understanding that low's in place. Yeah, so we're getting there. So just coming back to all of this and just recapping this a little bit on the daily chart. Here we've got A, B, C, and we need to know if we're going to, this 5 waves up here, we need to know if we're going to get a pullback and then up. And if that's the case, then we know that we've got this triangle pattern, and that means we need to just finish off this last move over here, and then we can move up from that point. It's either that, or if we get 5 waves up here, we know that the 1820, 1830 area, if that's breached, then we'll be coming down for one more move down into this space down through here. So that's about it. That's sort of where we're up to. Yeah, it's a rather all of this is a rather complicated pattern, and but yeah, now that it's getting to its end, and I know that it's getting to its end because I can see it in the stocks. So stocks, like I monitor Newcrest Mining, which is the second biggest mining gold stock in the world, I think, and I can see that it's got further to move down just yet. It's got some support there and it'll bounce around for a little while, but yeah, so anyway, we're getting there with all of this. Okay, let's have a look at silver. I haven't really updated it as such, but we'll have a quick look at it today. Silver. So okay, so this is my hopeful bullish pattern. And I don't know if it's correct or not, but wave 3 over here with an A and a B and a C wave over here for wave 4 being finished at that point. And it's still intact, you know, this 5-wave structure up here for wave 1. We could look at this as an ABC for wave 2, bit of a long shot, but still corrective in one way or another. And then we've had this push up here, and then this sharp move back down really is the same pattern as this guy here. And now we're getting 5 waves up here. So we pinned in this low last time we spoke, and now we're getting this impulse wave coming into play here. So that means that, as we spoke before, we can bring this up as an A wave, a B wave, and a C wave here to the 61.8%, and that's where it could fail at that point. So it's either going to fail at that point, or it's just going to keep building at that point. And this particular pattern here was very much like the Bitcoin pattern. And so, I mean, yeah, it was just the same. It was just the same. It's kind of weird, but there you go. And it's just patterns. It's not getting into the fundamentals of what relationship they are between each other. It's just like, oh, this is all the same pattern. This one's been going on longer, I think, but yeah, obviously longer. The Bitcoin was only a month coming down, but it had the same pattern, the same little sharp thing there, the same move up here, the back, and then the sharp Elon Musk move up through that point, and then back again. As a wave 1 and 2, and then of course it's moved off as Elon's bought $1.5 billion worth of Bitcoin or whatever, and but this one hasn't had the movement there. But I have to say, having 5 waves here, and I can see that it is impulsive, it's not corrective. So anyway, we'll just keep a bit of an eye on it. I won't go into the intraday part of it at the moment, but yeah, anyway, it's just sort of interesting. And we've got the bearish count for this as well. So we'll just see how it travels all through this here. If we get this A, B, and C, and if it fails at that point, then we know that we're coming back down here for a larger move as an A wave, a B wave, and a C wave coming down here, and then moving up from that point. In line with gold's pattern. So we'll see how that plays out. But we'll take a closer look at that next time round. Alrighty, thanks for tuning in. Cheers.